Hey guys, this is UC from iTradePrice. Thank you for tuning in. I'm hoping you guys had a good break, New Year's break, and you're coming back all charged up and excited. So we got some questions around the Tesla strategy, right? The information on what the strategy is, and what does the stop loss look like, what are the targets and stuff like that. So I will not go into the detail of what the entry criteria is for this strategy because that's proprietary information. However, I'll generally go over what this strategy looks for, and how do you decide your risk, your stop loss, and all that stuff, and how do you manage this strategy, or what we came up with. So this is all the data that our friend provided us. So she did this strategy risking $1,000 on every trade, right? And the risk to reward ratio was 1 to 2. So she would risk 1,000 on every trade, uh, and try to make $2,000 on every trade, because that's double the risk amount, right? And just quick statistics: losing trades were 36%, out of the total of 252 days, or 252. There were slightly more than 252 trades actually, because sometimes she traded twice in a day whenever the entry criteria was met. So that's why there are sometimes more than two trades during the day. But I would say those days were very rare. Okay, so winning trade percentage was 64. This was the average win, and this was the average loss, right? Not bad, but you have to keep in mind the aggregate nature of this strategy, because this strategy sometimes can give you drawdown for weeks. I don't say weeks, but like for days, right? You're like, okay, hey, I made all this money and now I'm seeing drawdown of all these days for the past 5 days. What the hell is going on? But that's the nature, right? It would do that, but because once you are in a winning streak, you would see some good big profits for a few days, and that will kind of swell up the account. But that's how it looks to work, right? For example, this April, big winning streak, and then you go back somewhere, I don't know, in March right here, uh, some losing streak, some winning streaks, all that stuff. But since your losses are contained, and you're always looking to make more than your risk amount in a good day or in a good trade, so it kind of grows up, and that's what the chart shows you here. How gradually it kind of went, and you just have to kind of keep at it like a robot, like every day, right? That's what is this strategy is all about. That you are just being systematic about your entries. Okay, so the stop loss is defined strictly every day based on the opening price of the stock. Okay, and then based on what you are risking on every trade, your position size is determined, right? And I'll give you an example. What this does is, so for example, here's a Tesla chart, right? 10-minute chart, doesn't matter. So I'm going to take this, let me grab my drawing tool here. Okay, so let's say your entry was right here, okay? And this is your stop loss, okay, based on the criteria. So that's your risk, right? That's 1R. Let's assume this is $15. Now what you are trying to do is you want to make $30, right, on this trade, which is 2 times your risk amount. So once the stock price moves in your intended direction, right, by your risk amount, so let's say you're halfway there. So what you do is at that point, you move your stop loss to your break-even price, okay, where your entry was, and let the price go back up, or keep going towards your target of 2R. If it goes there, sure, that books your profit. If it does not, falls back down, it ensures that you get out of this trade flat and not negative. Okay, so that's what you did, or that's what the strategy does. It does not trim. It does not look for trimming along the way towards your final target, stuff like that. It's just, and if whatever, let's say she does not, or the strategy, if the price does not go all the way towards 2R, and if it does not even come down below to hit your stop loss, right, you just close the position towards the end of the day, wherever the price is at that time, and just book the profit, or whatever that little profit is showing, or you just don't take the position overnight because you have to open another position in the morning. So that's what it does. Okay. Again, just very quickly, what this position does is that it looks to open the get into the position during the first 30 minutes here, and then whatever stop loss and you define, you give yourself a target of twice that amount. And once the price starts moving towards your intended direction by at least the amount that you risked, you move your stop loss to the break even, and then you just wait for the price to go towards the your target level. Okay, or you can keep raising your stop loss if you're actively managing or not, whatever. If you want to squeeze more, instead of twice the amount you risk, if you want to squeeze more, 2.2, 2 point, or 3R even, it doesn't matter. But what the strategy does is it was booking profits at 2R, because that's what she defined her target levels for every day. Okay, so that's what in generally, and you the strategy does, and you would do the similar thing on the short side as well. Let's say you have that's where you shorted, let's say, I don't know, just right here. So your stop loss is, let's say, over here, and now you're trying to target twice this. Let's say this is $20, so you're trying to make $40 on this trade towards the downside since you've shorted. And let's say the price has moved $25 down from your entry right here. So at that time, move your stop loss from here to your entry level, so that even if the price goes back up from here, it stops you out flat, right? Because it kept on going back up. I'm just giving an example, but that's what the strategy does. Okay, it does actively, you not really actively, but you do have to look at it and to manage your position once the stock price starts moving in your direction. Okay, so we have started this one in the Collective2 platform right here. You can go into the link and find out what this is. We do have some NQ futures trading as well, but I think we'll just minimize that going forward. We'll just stick with Tesla trades. I think you can you can simulate the strategy and just define the criteria as well, that you only want to do particular trades and stuff like that. So it's nice because it keeps track of everything. There are already a few people, and I think a couple of friends who have subscribed, but yeah, it's a nice way to kind of keep track of the strategy. Okay, hope you guys like this little video. Any questions or something, please drop us a note. Okay, thank you.